Good evening, everyone.
Good evening, ma'am.
Good evening. So, welcome you all to CMA Intergroup 1. The subject is financial accounting, and this is the lecture 3, right? So, today we'll do few journal entries. Here you can see there are 4 transactions from January 1, January 2, January 3, and January 4. So, these are journals, 4 journals, and I'll show you like how to give the journal entry. This is the format, and then ledger posting. Fine. So you can see here January 1 Ajay started business with cash rupees 2 lakh. So here the proprietor is Ajay, and he has started business on January 1st with cash rupees 2 lakh. The second transaction is purchase goods for rupees 6,000 to resale. Third one is sold goods for rupees 3,000, and 4th January, that is your rent paid rupees 1,000. So these are the 4 transactions, and we'll now give journal entries. So this is the format, journal entry. This is the format for journal entry: date, particulars, LF is ledger folio, amount. So this is the amount debit column, and this is the amount credit column. Fine. So how do we give journal entries? Fine. So the first transaction, here you can see, you can write here January 1, and the transaction is Ajay started business with cash. So always remember, whenever cash is coming into the business, okay, whenever cash comes into the business, okay, so cash will be debited, and whenever cash goes out from the business, cash is credited. So here Ajay has started business with cash. That means cash is coming into the business. Okay, so it will be
Debit.
Yes, cash account debit, and
Debit.
this yes, debit amount, this amount we will write in the debit column. So that is your 2 lakhs. Okay, and the credit will be, so he has
Capital.
started business. Yes, he has started business, so it will be what?
Capital.
Yes, capital. Very good. Capital account. So we will write this one in the credit column. So the students who are non-commerce students, you see it carefully. Debit amount, we are writing it in the debit column, and credit amount, we are writing it in the credit column. So here, okay, parallelly we are writing it. So the first journal entry is cash account debit. So cash is coming into the business, that is cash account debit 2 lakhs, to capital account 2 lakhs. Then we give narration. Okay, so narration is like, what is narration? So whenever we are giving journal entry, we write narration. And narration, the meaning of narration is like it identifies, or we can say whenever we read the narration, we will understand what is the transaction all about. So we can write here, Ajay started business with oh, okay, so everything is erased now. Again I'll write. So January 1 cash account debit to
Capital.
capital account. So this is your 2 lakhs. This is again 2 lakhs. Fine. So here the narration will be Ajay started business with capital. So this is the first journal entry. Fine. I think everyone has written. Fine. Now the second journal entry is purchase goods for rupees 6,000. So it is your January 2. Okay, January 2. And here the journal entry will be purchase goods for rupees 6,000. So journal entry will be purchase account DR, purchase account DR to
Cash account.
yes, purchase account DR to cash account. So whenever goods are coming in, so goods are coming in and the money is going out. Okay, cash is going out. So cash will be credit. Fine. So cash will be credit. So second journal entry is your purchase account debit to cash account. Understood? This one?
Yes.
Okay. Now next one is sold goods for rupees 3,000. Sold goods for rupees 3,000. So you can write in January 3, you can write. So your this is the format you can write down. Sold goods for rupees 3,000. So that is your
Cash account debit.
yes, cash account debit, because whenever the business firm is Ajay is selling goods, right? So goods are going out, what is coming in? Cash is coming in. So always again remember, whenever cash is coming in, cash is debited. So cash
Debit.
account debit to sales account.
Sale
Fine?
account.
Yes, cash account debit to. So third journal entry is your cash account debit to sales account. Fine? So that is the amount is 3,000. So that is the third journal entry. Now the fourth journal entry, rent paid. Okay, rent paid you can write down here in the same format. You can write down rent paid rupees 1,000. So whenever yes, whenever you are paying
And
rent,
is a expense. Yeah.
yes, money is going out. So what will be the journal entry?
Rent account debit.
Yes, rent account debit. So rent is an expense, so that way also. So rent account debit to money is going out because rent
Cash
is
account.
paid. Yes, to cash
Cash
account. Okay, so you have to write down the amount 1,000. So this way we can write down the journal entries in this proper format. So this is the format. Whenever you are preparing journal entry, so you have to prepare this format. Fine. So in partnership, you have a chapter partnership. There you have admission of a partner as a chapter, retirement as a chapter, retirement, then debt, resolution. So everywhere, okay, you have to do the journal entries. Okay, and you have to pass journal entries from the transactions. So this is the format that you have to draw in. That is date, particulars, LF. LF is ledger folio, amount, this is the debit column, amount, this is the credit column. So you have to give the journal entries and you have to give the narration. Fine? So this is all about your format. Understood everyone? Understood?
Yes, ma'am.
Okay. Okay. So now we'll post ledger. So ledger is like, that means we are preparing various accounts from the journal entries. So what is the first journal entry? What was the first journal entry on January 1? From January 1, the journal entry was what? Cash account debit to capital account. So this was the first journal entry and the amount is 2 lakhs rupees. 2 lakh and 2 lakh. Fine. So here the journal entry will be cash account debit. So we are preparing capital account. We are preparing capital account. So here cash is, we will write by, here we will write by cash account. Okay, so by cash account. So date here we will write January 1. If year is mentioned, then we will put year. So January 1 by cash account we will write here 2 lakhs rupees. Okay, so only one entry in capital account. So here how we can balance this? So this side we can balance, this side it is 2 lakh, this way we can balance, and this side also we will balance. We will balance both the side. This is debit side and this is your credit side. This is credit side. Okay, so here also we will write 2 lakh rupees. Okay, so because this side there is nothing, there is 0. Okay, so we are balancing this way. So 2 lakh and 2 lakh, and whatever is the balance. So here there is no any other account. So we will write here to balance it. So we will write here
To balance PD.
yes, to balance CD, not BD, to balance CD. Who is responding?
Samudra.
Samudra is responding. Very good. So balance CD. So here, if you are preparing for the month, so the last day of the month, okay, we will write it here, 31st January. Okay, so whatever balance we will get it, it may be in the debit side, it may be in the credit side. So here in capital, we have got the balance in the debit side here. So to balance CD, 2 lakh rupees. Okay, so to, CD means here carried down. The full form of CD is carried down. Fine. So this is all about your capital account.
Ma'am, I have a doubt.
Yes, tell me.
Ma'am, when we adjust the total amount in the other side and we subtract the amount to adjust it, so then we write balance PD, right?
Yeah. So here this side no. Here whatever balancing figure we are getting it. So we have to write here balance CD. See, this is CD. To balance CD. To balance CD. So here this is 2 lakh rupees. And here we are getting 2 lakh rupees, and here this was your by cash account 2 lakh. So we are balancing it here 2 lakhs. Okay. Yeah. Yes, balance CD we have to write it, and it is then here we have close. Then the next month it will be like this. This balance CD will come here. Okay, we will write by balance BD next month. So this is your next month, February 1. We are writing 2 lakhs. Okay, so next month it will be, see, CD is carried down and BD is your brought down. So for the next month, the balance BD, that is the opening balance, we can say balance BD is 2 lakh. So here we have balance, and this CD is brought down here the next month. Okay, so this way we have to do it. So this is the way to do ledger posting. Now any doubt?
No, ma'am.
Okay, so remember this is CD, this whatever the balancing figure we are getting it. So this is BF, balancing figure. So balancing figure we are getting 2 lakhs here. Okay, so that is like here brought down. So that is your by balance BD, that is brought down. So the next month that is your 2 lakh. Right? Okay. Now we will do cash account. Okay. To do cash account, we'll see various transactions related to cash. So the first one was related to cash account, debit to capital. Okay, so that is 2 lakhs rupees. Then next journal entry was purchase. Okay, so it was purchase account, debit 6,000 to cash account. This was the second journal entry. Third journal entry was cash account, debit to sales account, and the fourth journal entry is rent account, debit to cash account. Okay, so from these 4 journal entries, now we'll see everywhere we'll find cash. So here cash is debit, here also cash is, here cash is credit, here cash is debit, here cash is credit. Okay, so how we will give ledger posting in cash account. So here from first one, cash account. So here cash account debit. So cash is debit here, cash is debit here. So we will write to capital account 2 lakhs. Okay, so to capital account 2 lakhs. So here it is January 1. Now next one is purchase account, debit to cash account. So here cash is credit. So we will write here by purchase account. So we will write by purchase account 6,000. So this is your January 2. Now next, third one is cash account, debit to sales account. So here cash is debit, so we will write here January 3 to sales account. What is the amount? 3,000. So here it is 3,000. Now next one is rent account debit to cash account. So here cash is credit. We will not write cash here. We will write what? Rent. Cash is credit. Why? Because of rent. So we will write rent, not cash. Okay, so
By rent account.
yes, by rent account. Very good. So we will write here by rent account. Okay, so how much amount is? Amount is 1,000. So we'll write 1,000 here. Fine? Okay. So now if we have to balance it, which side is more? Debit side is more, right?
Debit side.
Yes, debit side is more and credit side is less. So now when we have to balance, here we will see. In capital account, we had only one account. Okay, so here we are getting 4. So here this side is debit side is more. So it is 3,000, 2 lakh 3,000. So this side also we will balance 2 lakh 3,000. Okay, so here this is 7,000 and this is 2 lakh 3,000. So if we will deduct 2 lakh.
1,96,000.
Okay, fine. 1,96,000. 2 lakh 3,000 minus 7,000. So we are getting 1 lakh 90. 1 lakh
97.
97. 96.
96, yeah.
Okay, 1 lakh 96,000 is the balance. So we will write here 1 lakh 96,000. So then only it will be 2 lakh 3,000. So this one we will be write as by.
Cash surplus.
We will write what? By.
Cash surplus.
We will write by balance CD. We will write by balance CD. Okay, so all these 3, if you'll add, you have to get 2 lakh 3,000. So this is the balancing figure here. 1 lakh 96,000 is the balancing figure. Okay, so here 1 lakh 96,000 is the balancing figure. So this is your CD. We will write BD here. It is coming this side. 1 lakh 96,000 will come this side. Okay, 19600. Okay, so here we will write to balance BD, that is brought down. Here we will write February 1. Fine, understood? Okay. Any doubt? Anybody has any doubt?
Hello, ma'am.
What is CD and BD?
Yes, ma'am. Can you explain the concept
is?
of CD and BD?
What is?
Concept of CD and BD.
CD and BD. Okay, so CD is like carried down. That is the balancing figure. BF, I have written no BF. This is balancing figure. Okay, so at the end of the month, because we are giving transactions for the month of January. So whenever we are closing cash account, we are closing cash account in the month of January. So whenever we are closing cash account, okay, so in the business, as Ajay has started the business, in the business Ajay brought cash in the form of capital 2 lakhs. Then he sold goods for 3,000. So the entire month, okay, money has come 2 lakh 3,000. Then he has purchased goods for rupees 6,000. We have given entry here from journal. Then Ajay has paid rent 1,000. So here expense is 7,000 and the money came into the business, that is 2 lakh 3,000. So what is the balance? Okay, balance of the business. Okay, balance of cash in the business of Ajay. Okay, so what is the balance? We have got the balance 1,96,000. So that is the balance carried down. That is the balancing figure that we have calculated. Okay, so at the end of this month, that is January, we have got the balance 1,96,000, and that balance we write as by balance carried down. Okay, carried down. So that balance will go to the next month. ठीक है, that balance will go to the next month. जैसे मान लो कि आपके मम्मी ने आपको पॉकेट मनी दिया, ठीक है, आपके मम्मी ने आपको ये जनवरी मंथ में 5,000 रुपीज पॉकेट मनी दिया. तो 5,000 में से आप लोगों ने यू हैव लाइक स्पेंड समवेयर on Saraswati Puja day you have spent 1,000 rupees, then you have bought a pair of shoes for 500 rupees, then you have bought chocolate. So that way, you have spent money and suppose 500 rupees is left. Okay, so that is your balance CD. For January month, 500 rupees is left, that is your balance CD. And that balance CD will be the opening balance for the month of February. So that is your 500 rupees here we are writing. So that is here in this sum, that is 1,96,000 is the opening balance. Have you all understood? Understood, Jayashree?
Yes, ma'am. Ma'am,
Okay,
can it be the other way also? Like, why not in a credit side we don't write BD, and here why we write? Like, is it the rule that says, or?
No, rule as in, see here, which side is more here? Debit side is more, right?
Yes.
Debit side is more. In capital,
Yes.
we have got like credit side more in capital account, right? In capital account, credit side was more because we have written by cash account 2 lakhs rupees. Credit side was more, so that's why here in capital account balance CD you can see we are writing it in the debit side, right?
Yes.
Okay. In cash account here more amount is in debit side, that is 2 lakh. Okay,
Yes.
more amount is in debit side, that is 2,03,000, and in the credit side, okay, it is less, that is only 7,000 here, only 7,000. Okay, so if we'll deduct 2,03,000 minus 7,000, we are getting 1,96,000. That is the balancing figure, balance that left with Ajay. Okay, so a balance that is left with Ajay, that means in the business. Now understood?
Yes, ma'am. Got it.
Okay, anybody has
Ma'am,
any?
what about BD?
Sorry, BD, full form of BD.
Yes, ma'am.
Okay, brought down. Full form of BD is brought down and full form of CD is carried down. Right? Okay, so this is your closing balance and this is the opening balance. Understood? Have you all written? Jayashree, have you written?
Yes, ma'am.
Sachin, have you written?
Yes, ma'am.
Okay, Vikas, Devnath, have you understood? Vikas, are you there? Okay. Now, the cash account is done. Now we will go for sales account. Okay. So sales account, so there is one journal entry for sales. So that is your cash account. Journal entry was cash account debit. What was the amount? To sales account. No, not 1,000.
3,000.
3,000. So cash account debit 3,000 to sales account 3,000. So now we will prepare sales account. So here you can see sales is credit. Okay, sales is credit to sales account. Sales is credit. Okay, so we will write in the credit side by cash account. By cash account, how much we will write? 3,000. Okay, we will write 3,000 here. So this is your January 3, I guess. January 3. So only one entry. Only one entry. So here we are getting 3,000 here, and this side it is 0. Okay, this side it is 0. There is no other account. So we are writing 3,000 then balance CD will be this side, because here the balancing figure we have to write it here, right? Whenever we are balancing, more is in the credit side, that is 3000, and here less. How much is less? 3000 is less. So here we will write to balance CD, and this is your January 31. Okay, and this will go to here by balance BD 3000. This will be February 1. So that way we give ledger posting. Understood? This one I think you have understood, Jayashree.
Yes, ma'am. Ma'am, brought down is for the next month.
Yes, brought down for the next month.
Okay.
Because here sales account, the balance of sales is 3000. Okay, balance of sales is 3000. Okay, fine,
Okay.
fine. Now when we'll see purchase account. So related to purchase, what was the journal entry? Purchase account DR to cash account. So goods are coming. When goods are coming, you're purchasing. So purchase account is debited, and when goods are sold, sales account is credited. Okay. So purchase account debit to cash account. What is the amount? 6000. Okay, 6000. So here where we'll give the ledger posting in purchase account, what we will write? What we will write? Which side we will write? Yeah, Jayashree, which side we will write? As we have prepared the
Debit
purchase-
side by cash account.
Debit side. Debit side, it is not by, it is to, right?
Yes.
Yes, it's to. Debit side is to cash account. Very good. To cash account. So here you have to write down the date, and here in the amount column you have to write down the amount. And this side there is nothing. So when we are balancing, we will write 6000 here. Okay, we will write 6000 here, and here we will write by balance CD 6000. So here we will write down the date, January 31st, and this will be brought down here. We will write 6000 here to balance BD. So that will be your February 1. Okay, so learn ledger posting very carefully. Okay, you learn it with full effort. You have to give full effort, learn it, because in partnership you have to give journal entries, and after journal entries you have to prepare various accounts. Okay, you have to prepare revaluation account, realization account, you have to prepare capital account. So if you are not good with journal entry and ledger posting, then it will be very difficult for you to do partnership. So partnership is a long chapter. Okay, now we will do rent account. Okay, so related to rent, the journal entry was rent account debit to cash account. So it is 1000 here, 1000, 1000. So in rent account, where we will give the posting, which side? Which side we will give the posting? Sachin, which side?
Debit side.
Debit side, yes, very good. We will write posting, give post here, posting here to cash account. So that is here we will write 1000, we will write down the date here. And as in the credit side there is nothing, so here we will balance it 1000, here we will write 1000. Okay, so 1000 is less, so we will write balance CD here by balance CD 1000. So here we will write down the date, and this will come here as balance BD 1000. So this is your 2 balance BD. So here you will write February 1. Okay. Understood? Fine. So that is all about your ledger posting. Now again, as I have told you, the process of accounting, the first one is, I have explained it to you, first class and second class. First one is recording the business transactions. Then we give journal, okay, journal entry. Then we post ledger, okay, where we get balance CD, that is called balancing figure. Example, sales account, salary account, purchase account, wages account, rent account, furniture account. So we will have multiple accounts and the entries, and from there we calculate the balance CD for the entire year. Okay, so balancing figure of sales for the entire year. So we did it for January month. So for the entire year, balancing figure for sales, for salary, for purchase, for wages, rent account, for furniture. So we give ledger posting in various accounts from the journal. Okay, so journal entry is the base. From journal entry we post into ledger. Post into ledger means we prepare various accounts, then we post ledger and we get the balancing figure, and that is called balance CD. Okay, fine. Then we also prepare, last class I have discussed with you about cash book. So we also prepare cash book. Okay, so in the cash book we record only the cash balances. Okay, if money is coming in or if the money is going out, so cash receipt and cash payment. Okay, so that is recorded in the cash book. So from the cash book we come to know balance CD of cash in hand, how much money is in hand in the office and how much money is in the bank, that is like bank account of the firm and the business. Okay, so from cash book we come to know about it. Then we prepare, the next step is like we prepare trial balance. Okay, so we prepare trial balance. So students, you have a chapter final accounts. You have a chapter final accounts in CMA Inter Group 1 in financial accounting, and the marks carries, that is your 15 marks. Okay, the marks carries this 15 marks, and sometimes it may be 20 marks also, because it depends upon the mood of the person who is setting the paper. But basically the marks is 15 marks. It may increase up to 20 also. So final account is one of the chapter, and you have to prepare final account, and in the question trial balance will be given. Okay, so all this, whatever you have, whatever I have taught you, lecture 1, 2 and today also, so that is the basic. Okay, now from here your journey will start. Okay, so in the question in final account chapter, okay, a trial balance will be given and few adjustment will be given, and you have to, from that you have to prepare a trading account, you have to prepare profit and loss account, and you have to prepare balance sheet. Then only you will score 15 marks or maybe 20 marks from the chapter. So you have to be very good at identifying various accounts related or given in the trial balance. Fine. So from the trial balance we prepare what we can prepare. We can prepare trading account, we can prepare profit and loss account, and we can prepare what? Balance sheet. So that is in case of your non-manufacturing company. Non-manufacturing company. So if it's a manufacturing company, you have to prepare manufacturing account, then you have to prepare trading account, then you have to prepare profit and loss account, then balance sheet. Okay, so here whenever we talk about firm and the company, so there are two types of companies. Okay, so one company is engaged in your manufacturing, that means production. Okay, so they bring raw material, they buy raw material, and those raw materials goes on through the production process, they produce, then sell it to the customers. That is your manufacturing company. And non-manufacturing companies are those companies who buys goods from the producers, that means they procure it and sell it to the customer. They do not manufacture. So those entities prepare trading account, PL account and balance sheet. And the manufacturing companies, they prepare manufacturing account, trading account, PL account and balance sheet. So in the trial balance, various accounts will be given. So now we will see trial balance. Okay, so what is trial balance all about? Okay, what is trial balance all about? So trial balance is a list of debit and credit balances. Okay, debit and credit balances. So all these balances, from where we will get it? From where we will get it? Before trial balance, before preparing trial balance, what we do it?
Ledger.
Yes, ledger, very good. Okay, so from ledger we get various balances. Okay, so it may be debit balance also, it may be credit balance also. Fine, debit or credit balance. Clear? As I have told you, every transaction has two effects, debit and credit. And whenever examiner is, okay, whenever in the question paper or in the book you are getting a trial balance, it has to tell you debit has to equal to credit. If in the debit side 2 lakhs, credit side also has to be 2 lakh, otherwise your question is wrong. Or maybe the accountant, okay, who has given journal entry or posted into the ledger, he did mistake somewhere. So that's why the trial balance is not telling, the trial balance is not equal. Okay, because in the journal entry I have showed you that every debit has a credit, equal amount, 2 lakh, 2 lakh, 3,000, 3,000. Okay, understood? So trial balance has to tell it. So list of debit and credit balances, here we can see. Okay, so here trial balance is a list of debit and credit balances taken out from ledger. Okay, so in the trial balance we write the debit and credit balances which is taken out from the ledger. It also includes the balances of cash and bank that we take it from cash book, as I've told you about cash book. Okay, from the trial balance we can prepare trading account, PL account and balance sheet. Okay, so now we can see list of debit and credit balances. These are the list. So debit balances are, you need to remember all this: cash in hand, okay, cash in hand, cash at bank, bill receivable, sundry debtor, accrued income, okay, accrued income, prepaid expenses, that means expenses which are paid in advance, petty cash, short-term advances given to someone, okay, short-term investment, any investment made by the firm, okay, it can be like in the form of shares, in the form of bond, okay, so any investment. Then advances given to someone, furniture and fitting, that is the what, asset, okay, furniture and fitting, land and building, freehold property, leasehold property, motor vehicles, equipments. Okay, so these are your debit balances. In the credit balances you can see bank overdraft. So what is bank overdraft here? Suppose in the bank there is minus balance. Okay, so generally what happens in our bank account, we have balances 10,000, 20,000, 2 lakh, but whenever there is minus balance, suppose in the account, business account, there is minus 10,000, okay, that is called bank overdraft. Okay, then capital, bills payable, sundry creditors, bank loan, sales, purchase return. So purchase return is deducted from purchase, it is deducted from purchase. So what is purchase return all about? Whenever the firm purchases goods, okay, and those goods are, suppose there is some defect in those goods, or if it is not according to the specification, okay, then like those goods are returned it to the supplier, okay, returned it to the supplier. So that is called purchase return all about, and the purchase return is always, you know, deducted from purchase. Then mortgage payable, outstanding expenses, the expenses which are yet to pay, outstanding expenses. Income, okay, received in advance. Then interest received, rent received, discount received. So yesterday I have told you, okay, any income, revenue, okay, or any gain, that will be your credit balances. So interest received, rent received, discount received, bad debt recovered, so all those will come in credit side. Okay, so equipments, livestock, computer, investment, goodwill, patent, copyright. So this side also you can see. Then trademark, preliminary expenses, discount on shares and debentures, underwriting commission, loss of stock, purchase, sales return, carriage inward. So carriage inward is like whenever, okay, any carriage that is involved with buying of goods, that is called carriage inward, okay, and related to selling of goods, that is called carriage outward. So here carriage inward will go to trading account and carriage outward will go to PL account. So this again, then audit fee, that will go to PL account. Printing and stationery, this is an expense, will go to PL account. Postage and telegram, repairs, okay, depreciation, discount allowed, charity, so all this will go to PL account, fine. And all the assets, those will go to asset side, okay. Liabilities will go to liability side, like bank loan and all. And in the credit side we will write all the income and the gains, and in the debit side we will write all the expenses and the losses, okay. So few more in the debit side. Bad debt, okay, bad debt. So what is bad debt all about? Okay, bad debt is like, suppose the farm, okay, so farm has sold goods to Mr. X, okay, for rupees 50,000, okay. So a farm like, suppose Ajay, we are talking about Ajay. So Ajay has sold goods to Mr. X for rupees 50,000, okay. So goods are sold to Ajay, to Mr. X for 50,000. So here for Ajay, Mr. X is the debtor, sundry debtor. Mr. X is sundry debtor. Sundry debtor are those who, from whom we are yet to get money, okay, to whom we have sold goods on credit, and Mr. X will pay us money. So we are expecting, Mr. X told that I'll give you 50,000 in the next month. So Ajay was waiting. Then 1 month gone, 2 months gone. After that, when Ajay inquired, he found that Mr. X gone to his village. So for Ajay, 50,000 is called bad debt, okay. Bad means क्या? खराब, okay. जो debt, जो उधार था, वो खराब उधार था. Mr. X went, he left for his village without paying 50,000. That is a loss. That is a loss for the farm. So that's why we write down in the debit side. Okay, we write down in the debit side because bad debt is a loss for the farm. Okay, so how it is loss? Because Mr. X was sundry debtor and he did not turn up. Okay, 50,000 he has not paid. So bad debt will be here. Bad debt will be deducted from sundry debtor, 50,000. Okay, so bad debt is a loss. Okay, if it is given in the trial balance, we write down in the PL account. Fine? We write down in the PL account. So selling expenses, rent rates and taxes, all these are expenses we write down in the PL account. Advertisements, salaries and wages. So if wages is given separately, we write down in the trading account, and salary we write down in the PL account. Insurance, lighting, power, all these are debit balances. So lighting, power, if it's a factory writing, then we write down in the trading account. Okay, power we write down in the trading account because these are direct expenses. Okay, royalty, bank charges, commission paid, telephone expenses, drawing, income tax, life insurance premium, interest on capital, opening stock, all these are debit balances. Okay, so in the trial balance, all this will be in the debit side. Okay. Okay, so here you can see all expenses and losses are debit items. We write down in the debit side. All assets are debit items. All income and gains are credit. We write down in the credit side, and all liabilities are credit items. Fine. Any doubt? Anybody has any doubt? Jayashree, Sachin, Vikas, any doubt? Do you have any doubt?
Ma'am, I have one doubt about, not a doubt actually, I need a clarification about bad debt. So for bad debt, if it is not recovered, it will be in the debit section, right?
Yes.
So if it gets recovered, it will be a gain, so it will be in the credit side,
Yes.
right?
Yes. There is an
Okay,
item
got
here
it.
you can see. Yeah, there is an item here you can see. Bad debt recovered. This one. Bad debt recovered. Okay. So bad debt recovered, that is your credit side we are writing in. Very good question. Bad debt is a loss, and when we have written as bad debt, and after few months Mr. X turned up and he has paid. Okay, so that is bad debt recovered. We have already considered it as bad debt. Then after that, if it has recovered or the person has paid, that will be bad debt recovered. We will write down in the credit side. Very good question, Sachin. So it is bad debt recovered. We write down in the credit side because now money has come. Right? Okay. Now you can see here again this one you remember. Write this. This is very important. Expenses and losses, debit side, assets, debit items, we write down in the asset side. So you need to identify what are assets. Income and gains in the credit side, as one of the example is bad debt recovered, sales and all. Then all liabilities in the liability side, so those are your credit balances. Fine, so we'll do a quick sum here. This is the trial balance you need to identify here. From the following balances of Sachi as on February 28, 2019, prepare a trial balance. Okay, so here debit credit is not given. Okay, so cash in hand, cash at bank. So cash in hand, what balance? Cash in hand, you tell me the balance.
And debit balance.
Yes, very good, because it is an asset. Cash at bank.
And that is also debit.
Yes. Investment, debit.
And debit.
Yes. Manisha here already written debit. That means Manisha is a debtor. Manisha debtor. So it's a debit balance. Maya is a creditor. So it's a credit balance. We will write in the credit side. That is like in the liability side. Payal again liability side. So these are liability. Okay. Drawings. Tell me about drawings.
Ma'am, debit.
Debit, yes. Drawing is the amount of money or the goods that is withdrawn by the proprietor. Okay, so that is debit. Patent. Patent is an asset. Then it will be
debit,
yes. Freehold premises, leasehold premises.
Ma'am, credit.
Yes.
De-
Purchases.
Ma'am, can you explain the
Debit.
freehold premises?
This is like premises taken on lease.
Ma'am, it is an asset.
Yes, it is an asset. Then purchases, debit. Yes, sales, credit. Opening stock, debit. Survey debit, here it's written. Survey debit, that is, survey is debtor, then it is debit. That
Ma'am, what is
understood till here?
opening stock?
Opening stock is like last year, okay, some stock has left with the firm, okay, so that will be the opening balance, or we can say opening stock. Okay, कोई कुछ stock last year रह गया था, so वो अभी next year के लिए opening हो गया, ठीक है, वो तो हम लोग ऐसे गोडाउन में नहीं फेंक सकते, we have to consider that. Okay, so that is your opening stock.
So it's an asset.
Opening stock here we write in the debit side of trading account. So that is considered as the raw material, or we can say because see the stock, whenever we talk about stock, so stocks are coming from where? Like whenever we purchase, okay, so that goes into purchase account. Okay, so those goods, okay, are recorded in the purchase account. If we are buying goods for the purpose of reselling it, so we considered in the purchase account. Fine, so that will be the stock which is left, so that will be your closing balance. Okay, and for the next year it will be your opening balance. Now next one is capital. Okay, so capital here, capital is your credit balance, okay, preliminary expenses, then rent outstanding. Rent is an expense, rent outstanding, that's a credit balance all about. Then interest received in advance. Okay, so now we will see where it will go. Okay, so cash in hand, debit, cash at bank, debit, investment, debit, sundry debtor, debit, sundry creditor, credit, drawing, debit, patent, debit, leasehold premises, okay, then purchases, then sales, opening stock, capital, preliminary expenses, rent outstanding, interest received in advances, credit. So here you can see both are telling. Okay, so trial balance, it has to be equal both sides. Okay, that means it's correct. Fine. Okay, well students, that's all for today. We'll continue with trial balance in the next class. Then we will do few adjustment entries. I'll explain you how to do the adjustment, okay, in the final accounts. Then only we'll proceed with the long questions. Fine. Okay, that's all for today. Thank you so much.
Ma'am, can you please share this document in our WhatsApp group?
Okay, fine. Okay.